Hi everybody, and welcome to part 3 of this complimentary mentorship course brought to you by Trade Guider Limited and tradingthemarkets.com and the VSA Club. And I'm your host, Gavin Holmes. Welcome. I'm the author of Trading in the Shadow of the Smart Money, and I'm the senior fund manager of Wyckoff Williams investment portfolio here in the UK, broadcasting to you live from the New Forest National Park in the United Kingdom on the south coast. Right opposite a place called the Isle of Wight, for those of you that know that. Today we're going to talk about charts. On Saturday, on parts 1 and 2, we talked an awful lot about what makes human beings successful and why some people fail. Now, I was watching a TV program last night, which was absolutely fascinating, just reinforcing really what I talked about on Saturday. And I've had a lot of really great feedback about the event on Saturday, which we did, of course, to assist my colleague AJ, whose son was diagnosed with cancer and has gone through, obviously, a lot of financial hardship due to that. And we put together a Facebook page, or he did, with him, trying to raise some money to assist him. And we've already raised well over $2,000 already, so thank you for your contribution. If you've donated to that, I really appreciate it, as does AJ. It really does make a difference to them. So today we're going to talk about charts, and of course we're going to be looking at live charts. We're going to be looking at actual Forex charts, futures charts, and we're going to show you why the market's doing what it's doing, why actually there's going to be some big opportunities, I think, coming up in the next week. Because the markets have been fairly quiet. We've got crude oil inventories today, but no major news. But I think you're going to find that next week's going to be extremely busy. And I did expect that we are going to have another leg up in the stock markets. I haven't changed my view, as you're going to see. We have not got anything public yet for the Wyckoff Williams portfolio because it's a private fund. It's not publicly traded or listed yet. It's a private fund, and when we release the prospectus to that, I will of course let you all know. So, because we are looking at real charts with real money, we're a registered company here in the UK. I want to read to you this disclaimer, which is very important. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss, and it's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures or Forex. Therefore, you should not risk money that you cannot afford to lose. Trade Guider Limited is an authorised representative of Forex Max Limited, and we're regulated by the Financial Conduct Authority here in the United Kingdom, number 229906. All right, let's get to what we want to talk about today. Now, can I just ask, if you were not here on Saturday for the event that we did Saturday, can you just type in N, which means not available, not here Saturday? I just want to see how many of you were not on the Saturday event. I'm not going to go back over it because I've recorded it, but some of you would have not seen the Saturday event that we did, which is actually quite important to today's live trading, by the way. I did send the record. Okay, there's a lot of you. Actually, I'm up to already 68 people that I can count here, but a few of you said you did watch the recording, which is fine. And if you haven't watched that recording, it's really important that you do, because it plays a part in what I'm going to talk about today. Now, of course, on Saturday, I talked a lot about my personal experiences of them, not just the markets, but of reading a lot of books on personal development, on improving yourself as a human being, on being successful, making money, being happy, and, being wealthy and healthy. All of those things fall into the category of trading and investing, believe it or not, because in fact, just like if you're going to be a sportsman playing tennis or golf or like Tom Brady, if you like, he's 5 times he's been a quarterback at the Super Bowl. What an amazing man. Interestingly enough, my wife was in the car yesterday with me. She said, do you follow the Super Bowl? And I said, I don't really follow it. I used to watch it, obviously, when I lived in Chicago for 15 years. Of course I watched it. But she said to me, do you know that Tom Brady, when he had an injury, he had a really bad injury, he decided, originally they put him on some steroids and tried to operate on his injury, and it didn't work. He had enough of it. So he got rid of the Western medicine, and you can read this. He went into meditation and yoga, and, he's 40 years old, right, playing against, 20, 21, 22-year-olds, and still participating in the Super Bowl. And he's gone away from all the Western medicine and very much into yoga, meditation, and he's kept his body in great shape. And there's a great example there. 39, he's 39 now, yeah, nearly 40, amazing guy. So what I'm going to talk about today, of course, is trading and investing. Most people who come to these seminars and webinars, and we know because we do a lot of research on this, they've had problems, and it's not just problems with their trading, right? It could be other things. And they want to, a lot of people I talk to say, look, my real, if you want, ambition or dream is to be able to be financially responsible for myself and trade each day for as long as I want to, whether it's an hour. I mean, I only trade personally for 3 hours a day, and then go and do my own thing, but be responsible for my own finances. But most importantly, to understand what the market is and how to make money in the market, because it does seem so easy, doesn't it, that you get all these companies out there telling you how easy it is to make money in the financial markets. And unfortunately, I'm going to be honest with you, it's not easy. If it was easy, everyone would do it and everyone would be making money. And of course, we know that at least 85 to 90% of retail traders don't make it. And they consistently try, but they often bang their head against a brick wall, and they don't make it. But there is a percentage of people, some of them are in this room, many of them are customers who have proven to, I mean, we've got a customer in this room, Danny Eunice, who started his journey with us a few years ago. In fact, Danny, I think he's here. So let me just switch on his mic. He can just say a quick hello if his microphone's working. He's based out in Australia. Now, if you want the story of someone who's come through and made a success to become a full-time trader and then write a book on the subject, which he just launched a few weeks ago, which is really selling like hotcakes right now, this is an example for you. And it proves to me, and it proves to hopefully you, that you can do it. You can get this knowledge, as I'm going to show you today, just with a little bit of effort. And I'm talking about 20 hours of your effort. That's all it needs. We've condensed it down now, in my opinion, to something, if you put 20 hours, that's it, you will understand what we know. Danny, are you there, by the way? I've just put your mic on. I've put your...
Hello, Gav.
Oh, good day, mate. How you doing?
Good, mate. While you're, drinking tea, I'm, sipping on frozen Cokes. It's hot down here.
Frozen Cokes.
Frozen Coke.
Sounds delicious. The frozen. What's the temperature then? Go on, wind me up.
Well, today it reached about 36 degrees Celsius.
Wow.
Tomorrow's 37, so it's quite warm.
Yeah, there you go. Well, I was just mentioning there about your journey, and I mean, obviously you're now working with the team at Trade Guider, but you started your journey like most retail traders. If you read your book, you went through all the pain at the beginning to get to where you are. I suppose what I'm trying to say here is, in order to make it in the markets and be successful, there is an element of pain that I think we all naturally go through, including myself. I didn't make it, even though I had Tom Williams with me, God rest his soul. He passed away in November last year, and he taught me a lot. The first few months of trading with real money, I actually lost money, and I couldn't work it out what I was doing wrong. And it wasn't necessarily what I was doing wrong. It was that I was too impatient. It was my own human failing that was causing me the problem, not the chart reading, not the principles. It was me. And Tom said to me, I remember, he said, Gav, he said, you're going to meet thousands of people in your travels as you go and teach. He said, and without a shadow of a doubt, their biggest failing won't be chart reading, it won't be VSA, it'll be themselves. They will be self-sabotaging themselves without knowing it. And your job is to help them pass that stage. Would you agree with that?
Yes, certainly. Yeah. So there's a lot of traders out there that they want to trade and make quick money without learning how to do it properly, and like you said, become they're not patient at all, and they take trades based on hunches, really. So it's very important for traders who want to make it to really understand a certain strategy that you're trading, and basically rely on yourself and nobody else. Because I know when I first started trading, I relied on my broker to give me a good trade, and they put me behind by $10,000 on my very first trade, and then I could have just given up and said this is not for me. But then I said I'm determined and to learn and and basically master it.
Well, I've just had a very large fund manager who's read your book. He read it last week, and he's read my book as well. And he's helping me with my registration and everything like that. And he said, Gavin, he said, what you can read through Danny's book without a shadow of a doubt is the love of volume spread analysis and how it changed your opinion, not just of trading, but of the world around you. I think that would be a fair comment. That's what he took from your book. He thought your book was excellent, and he's already using one of your option strategies very successfully in Apple, the US stock. He's done brilliantly already. Yeah, so I mean, it goes to show you, even big fund managers think they know it all, and they don't know it all at all. In fact, this particular gentleman didn't use volume until a few weeks ago.
All right.
Even I'm staggered at that one. He's managing a serious size account. Didn't even look at volume at all. He was using more fundamental analysis than anything else, really, looking at the accounts of the company. And I said to him, to be honest with you, I won't mention his name because I think he's listening. I said, to be honest with you, I said, what are the fundamentals got to do with anything? I said, because usually the accountants, I mean, you look at the fundamentals of Exxon and some of these other companies where they put out accounts like Tesco in the UK, and 2 years later, it turns out the accounts were a complete load of rubbish. so they, misreported. It happens all the time. Anyway, we can come back to that. What we're going to talk about today, guys, and Danny's going to be in the background there, is how you can make success using VSA. And if you want a great book to start out with, get Danny's book. We can show you where you can get that on the website shortly. Now, I'm going to ask for all your help shortly as well, because we've just launched a new website. It's not completely new. It's just slightly a few new things added to it to simplify it. And I'd like your help, if you don't mind, just looking through the site to tell me what you think's good and what isn't good. Email my wife Laura, and for any suggestion that we adopt, we will give you a $250 gift voucher for our store. So and again, if you for any reason helped us with the last site and didn't get your gift voucher for any reason, let my wife Laura know, because we do email people, but we do find occasionally, unfortunately, that some people don't get the emails because they're blocked by their ISP. So Laura's email is very simple. It's laura@tradeguider.com. Right, let's get to the charts. So what we're going to talk about today is how to make it in the markets, but we're going to talk about chart reading, and we're going to use examples in futures. We're going to do a stock scan. Going to be with you for a couple of hours, and the idea here is for you to go away at the end of this event and look at the chart reading masterclass that we've provided for you in this link here. Okay, now this is the link. It's tradetowin.com. Go down to the bottom. This is the masterclass that I produced 5-6 years ago now with Tom Williams when he was with us, and of course Philip Friston, who's a great friend of Trade Guide, or a fund manager. Can everyone hear me? Some people saying they can't hear. Absolutely. You should better. Yeah, everyone can hear me. Yeah, that's what I thought. Good. Yeah, that's what I thought. Everyone can hear. Good. Okay, fine. So this masterclass here has got all the signs of weakness and signs of strength that I use every day in my trading. By the way, there is no charge for this. This is put together completely free of charge. The whole course, including today, which had a value because we're raising money for Gideon, Iron Gideon, which I'll talk about later on, to assist my colleague AJ, who many of you know is head of our tech support, whose son Gideon was diagnosed with cancer, and as of obviously with the American system, it's put massive stress on the finances, and you can appreciate I want to do my best as his employer and a friend of mine to do my best for him. So that's one of the reasons we're putting this together. So let me talk about very quickly. I've written 2 books. I'm in the process of finishing my 3rd book called Think, Link, Create, which actually should have been finished in 2012. And I'm very glad it wasn't, because the knowledge that I've had since then and some of the stuff that people have sent me has made a massive difference to the contents of the book. And in fact, I'm so pleased that I didn't publish it when I did, because I know a lot more now than I did then. And it was my 50th birthday in December last year, and I feel it's exactly the right time to publish a book about some of my experiences of what we call the law of attraction, which is a universal law. Whether you believe it or not, it's around us at all times. And some people have heard of it, some people haven't, but more and more and more people now are realizing that there is more to the human being than just five senses. And there's a lot of scientific evidence now that there is a sixth sense that we're starting to understand, which can make a big and positive impact on our life if we understand what that law is. And I touched on that in quite a lot of detail on Saturday. God just typed in the American healthcare system sucks is his word. Well, I have to say one of the reasons I moved back to the UK, one of them was my wife has an ailment, and it was costing $2,000 or $3,000 a month, and we were insured. Whereas here, the healthcare is completely free. And whatever anyone says about our National Health Service, here in England, it's a wonderful organisation. And my two children, my wife and myself, when we've used it, have been over the moon and been really well treated. Anyway, let's get on with the chart. So that's me. My name's Gavin. I'm your teacher here today. And I'm probably going to be joined later on by Steve Phillips. He runs our live trading room. And also we've got with us Danny Younes. And I think Grigory Margolin may be here as well, head of technology. Grigory, if you've got a microphone, let me know. I'll bring you in as well. So a little bit about what I do. I now run a fund here in the United Kingdom. I also teach people to trade. Now that might sound a little bit odd for people to say, well, Gavin, if you're going to be managing a fund, surely you will be the smart money. You won't want to teach anyone how to make money in the markets. And that's actually completely the opposite, because the man that taught me, Tom Williams, who was a former syndicate trader, passed away in November of last year. But one of the promises I always made to him when we first bought the company from him back in the late 1990s, early 2000, was that the promise I made, I would never not teach people how the markets really work, and I'd tell them the truth about volume spread analysis, which is what we teach. And in fact, my life has been fully enriched by traveling all over the world, in fact, 45 different countries, both online and live, actually trading my live account and actually showing people the principles as they happen. The last live event that I did was launching our new hedge fund professional software at the Chicago Mercantile Exchange, the CME group. And Grigory's here, so I'll bring him in a minute as well to see if he's got any trades that he's found today, because we are going to be looking at charts. So when I talk about today trading in the shadow of the smart money, what that means is trading in the same direction as the big players are doing. Now, you might be very surprised to hear that they do the opposite of the group and they make money. When you read my book, or you read Tom Williams' book, or even Danny's book, you're going to hear the word group or herd trader. The fact that you're here today means you're not a herd trader. And it actually means you have the potential to be a winner. You can trade to win. But number one, you've got to have the knowledge. Number two, you've got to have the belief. And number three, you've got to have the capital. And if you've got those three things, as I can show you with not just one example, but many examples of customers. In fact, we've put two documents in that Trade to Win website of Earl Ehrenler and Tim Raymond, two customers of Trade Guider that entered real live trading competitions with real money. One was in futures, one was in Forex, and won using real money. One was a 46%, I think it was, or 42% return over a 12-month period. It can be done. You can make it in the market. But at the same time, you have to understand it's not just about chart reading. It's about your own self-development. And that's what we are here to help you with as a company. Now, again, you might find this interesting. The method we teach is known as the Wyckoff method. And the Wyckoff method, it says here, presenting the secret trading strategy from the 1930s that hedge funders don't want you to know about. Well, too late, I'm afraid, because you're here and you do now know about this. And it talks about the Wyckoff method. In his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique. It's out of print and somewhat difficult to find these days, although not impossible. But even when this was written in 2013, hedge fund managers still swear by it. One of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. And on my bookshelf next to me in my lovely trading office here in the New Forest, I have books by Richard Wyckoff, by Richard Ney, by David Weiss, by Gary Dayton, all talking about the same thing, that the markets are manipulated, but if you understand how to read a price chart and how to recognize when it's happening, then you can have an opportunity to participate in the market. Now, but I mean, I've got several people say, Gavin, my belief system is what's been causing me a problem. Not one person, that's 7 or 8 already typed it in. I totally accept and totally understand that very few educators in this business even touch on belief or even touch on law of attraction or universal laws. Why? Because it appears to be complicated or indeed controversial. But I don't care, because I know it's made a massive difference to my life, and it's made a massive difference for those who followed it, to people who've looked at some of the webinars that I did back in 2010 on the law of attraction. One particular video has had over 100,000 views, and it's making life-changing situations for people who've looked at it, which is why that part 1 and 2 that I did on Saturday, please do go and look at it if you haven't already. Now, these are the 2 most influential people. One, obviously, Wyckoff, I never met, but I've read pretty much all his work and studied his work. Richard DeMille Wyckoff, and of course, my master, who taught me pretty much everything I knew about the markets. We traded together for many years. He was a former insider, a syndicate trader, Tom Williams. So Richard Wyckoff, for those of you who don't know him, was born in 1873, passed in 1934, and he was a stock market authority and the founder and one-time editor of the magazine of Wall Street. He said thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transactions second by second. And therefore, those who can interpret what transactions take place second by second or moment by moment have a distinct advantage over the general trading public. And here's Tom George Williams, born in 1929, passed away November the 7th, 2016. He said, if you can read a chart correctly, you will understand the markets do not move randomly, but are moved by smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in the volume and price. And you have a chance to profit by following their footsteps. Volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release true volume information or figures until the day after trading took place. Now, everything I'm going to talk about is based on a methodology, and the methodology is about chart reading, how to read and disseminate the price chart. Yeah, thank you, Andy. I spotted that as well. Cheers. I just spotted that. Thank you. Volume spread analysis. If you want to find more about it, there's a website dedicated to it, volumespreadanalysis.com. Okay, but you're going to see it in action today, and you're going to see all the principles that I think are important to you today that are discussed in that chart reading masterclass. So when I refer to volume today, I'm talking about the activity that's shown in price charting. If you switch it on, and most good charting packages, in fact nearly all of them, will have volume. And volume is simply the amount of activity that's taking place in the time frame. Now, someone asked me, Gavin, I'm a Forex trader. There's no volume. It doesn't work, right? And this is what a lot of these big brokerage firms will have you believe, oh, don't use volume because it doesn't work. It absolutely does work. I'm going to prove it to you today. I'm going to show you that it works. And it's called tick volume. And it's very, very powerful. In fact, I sometimes think that the volume that we get in the Forex market, when you use it alongside the volume in the currency futures market, you'll see the market does the same thing. So that proves that the volume has to be relevant in spot Forex, and I'll show you it today. So, no, I know, yeah, Robert's just saying, well, most trading educators will say, oh, ignore volume in Forex, it doesn't exist. It does. It's tick volume, and it does work. So how does volume spread analysis identify the moves of the smart money? Well, simple. The golden rule that Tom Williams always drummed into me, he'd always say it, is, Gav, volume is activity. That's all you need to know. It's the activity of the professional side of the market, the big players. And it's the big players that move the market. That's why we're interested in their activity, because we want to follow their footprints. A bit like an elephant, if it walks across your front yard, it's going to leave some footprints. If you've got nice grass there, you're going to have big footprints. Well, if you want to follow the footprints of the smart money, they leave their footprints in the volume, the price action, and the range or spread of the bar, which is why we call it volume spread analysis. We analyze the volume, the range, or the spread of the price bar, and the closing price. Very important. So will it work in Forex and currencies? Yes, it does. Absolutely, definitely, 199% it does. So, and I've been on Bloomberg with this, where I've talked about volume in Forex, and even some of the big brokerage firms, well, people, no one uses volume. They don't want you to use volume because it actually works. So today we're going to talk about the concept of scan, confirm, and trade. Now, John's asked a question, what is a tick? Very simple. A tick is the movement of price, and it ticks up, it ticks down, or sometimes it doesn't move, which is rare. But every time you get a tick, it's the movement of price, and we can create volume by lots of ticks happening at different prices, creates your volume in Forex. So that's why we call it tick volume. All right, it's different from exchange traded volume, which you get from a futures contract traded on the Chicago Mercantile Exchange, which is the CME group. But if you want to know about the difference between trading Forex and futures, you can go to the CME website, Chicago Mercantile Exchange, or you can go to a site that I use a lot, which is Infinity Futures website in Chicago. I can direct you there. And they've got some really good videos about the differences between trading futures and Forex. And in fact, at the moment, if you're in the United States, you're going to find it near impossible to trade Forex in the future, because they've just closed down one of the big FX companies out there. The CFTC closed them down last week. So they're making it more and more difficult to trade Forex. But a lot of other companies in Australia, Europe, London are providing really good Forex quotes, and a lot of people are trading with them. So, but we'll come to tick volume. Yeah, a guy, we'll come to that. We'll actually show it. So someone was questioning Forex and volume on Saturday. Yeah, I remember that. And if that person's here, we'll show you it actually live. Okay. Yeah, I have recorded this. Yeah, and I'm going to put it on YouTube. Yeah. Okay, Michael, yeah. I'll come to that at the end, because I don't want to make this any sort of sales pitch. This is educational. I'm not here to pitch anything today, because it's free. So I'm not going to get into all the different products at the moment, but if you need some help, email Laura and I can point you in the right direction. That's not a problem. So what is the scan, confirm, trade concept? Well, number one, to identify trading opportunities by finding unusually high volume on the chart, which we call climactic, followed by low volume, right, at the same price level. Now that's interesting. Someone says, well, why would you want to see low volume at the same price level as you've seen high volume? And it's really very, very simple. The reason you'd want to see that is because if there's been massive activity at one price level, hence you have high volume, and then price goes back to that level, but there's now very low volume, it means that there's lack of interest now at that same price level from the professionals, the smart money, because they've already done something with the very big high volume in the background, as I'll show you. And the other thing we want to look at, very important to the trade guide VSA Wyckoff method, is what we call trend alignment. Trend alignment. Now, I know it's an old saying and it's a bit cliche, but the trend is your friend. But here's the question I get asked all the time at seminars. Gavin, which time frame do I want to look at? for a trend. I'm a scalper. Do I need to look at the weekly trend? So I'm in the market for 5 or 6 minutes. Do I need to look at the daily trend? Is it even relevant to me? Do I need to look at the 4-hour trend? Do I need to look at the, you know, the 30-minute trend? See, that's the wonderful thing about the markets. They're fractal. They're always moving. Now, on occasions, you will find that the trend of the small time frame, the smallest I really look at is the 5-minute when I'm looking at trend, will align with the bigger time frame. So you'll have a 5-minute that's going up, a 15-minute that's going up, a 60-minute that's going up north. You'll have the 240-minute, the 4-hour going up, and the daily, the weekly, all going up. So let me ask you a question. In that scenario where the market in all these trends is going up, would you want to be buying or selling? What do you think? And I'll talk to you how we do that. Yeah, fractal means it's constantly moving in different time frames. So the 10-second chart is moving, so is the 1 minute, so is the 15-minute. That's what we mean by fractal. Right, well, what you want to do in an uptrend is buy the dip. And that means that as the market rallies, if it comes down and starts to correct, but the volume is now very low on the correction and everything's moving higher, you trade in that direction until you see unusually high volume on the upside, which will often mark a turning point. We call that the end of a rising market or a buying climax, and that's covered in the chart reading masterclass. So the questions are coming in now. Okay, Gavin, so how do I look at all these different time frames and know they're aligning in the direction I want to trade? I'm going to show you that today. That's one of the purposes of this webinar. And then when we scan and we confirm that the trade or the trend is in the right alignment, then we need to know when a clear buy or sell indicator in volume spread analysis, which I'll refer to from now on as VSA, which means volume spread analysis. We want to know that a principle has been found in the direction of the trend. So if the trend is up and everything is green, I call it the garden is green, I'm going to pay a lot more attention to VSA principles that are colored green because it means they're strength principles. If the market is, however, negative and it's going down and it's pushing lower and it's red on the 5-minute, 15-minute, 60-minute, 4-hour daily, weekly, and then suddenly I see a red signal appear, I'm going to give a lot of strength to that signal, or a lot of, sorry, weight, don't use the word strength, a lot of weight to that signal because it's what we call a sign of weakness in a downtrend. And you're going to see an example of that actually happening now in a currency, a Forex pair, which sent a trade alert out 3 hours ago. And it keeps sending out alerts for shorting this particular instrument because of the trend of price, which I'll show you later. And then what happens is with our system, we can program it to send us an email. I mean, you as well, if you've got our software, the system will email you. And a lot of people who've even got our software don't know how to do this. I don't know why it's in the manual there, but you can actually set an email. There's a YouTube video to show you how to do it as well. So if you've got our software, you can set it to say, right, send me an email when a no demand or an upthrust signal, which is a sign of weakness, has appeared in a downtrending markets. Yeah, thanks, Robert. Yeah, that was a good one. Same patterns occur in multiple time frames. Not necessarily the same, but similar. And I'll show you why. It doesn't always be the same, but you definitely get similar patterns. And one of the things that this does is allows you, or it alerts the trader to monitor and scan hundreds and hundreds of charts at the same time, as I'll show you. So the system is we call it sniffing out trading opportunities for the trader to then analyze. So what it's doing, I'll just very briefly quickly show you here, what's actually happening here is that I come in here and switch on the scanner, okay? This is the scan manager. This is not Smart Center Pro, the hedge fund software, okay? This is just the retail software that we sell. Thousands of people using this and very successful with it, because what it's doing at the moment, you can see it's monitoring all of these futures contracts. All right, so all of these contracts are currently being monitored. I'll show you all where you can get that video. It's on the support chat. In fact, what I'll do, I'll ask AJ if we can put all the YouTube videos in the support area of the website so you can access them in one place. I'll do that later, Gar. So you can see here, one of the things that caught my attention today was the euro was a potential short earlier on today. And interestingly enough, gold had some indications on it. But I'll talk more about this later. But if I want to very quickly see the trend of price on all of these symbols without using our Smart Center Pro fund software, I can just click on this button here and watch what happens. Now, here's the New Zealand dollar. I'm not going to go through all of these, right? But this box, each box represents a time frame. Okay? So each box represents a time frame. This box to the left, okay, is the last, there's 20, I think it's 25 or 20 boxes. Let's have a look. 3, 6, 9, 10. 3, 6, 9, 10. Yeah, 25 boxes for each column. And each one represents a time frame. Now, the way we measure trend alignment is proprietary to the VSA system. So I'm not going to tell you how we do it. But it's based on a number of things and a number of criteria looking at price and volume. And you're going to see here that, well, I'm going to ask you, this is the right edge of the chart. So this would be the weekly time frame, the daily time frame, the 4 hour, the 60, the 15, the 5. I don't really use the 1, so we can ignore that. But for the moment, that's the 5 that I would use. Now, let me ask you all a question. We're looking at the right edge of the chart. Would you say we're in a bullish market or a bearish market based on the scanner? Yes. I'm going to answer Themistocles' question, and then I'm going to answer Park's question. Hello, Park. I haven't seen you for a while. Nice to see you. Right. Themistocles asks, would you say that the bigger time frames predominate the smaller ones? Yes. Absolutely yes. Look here. Look at the weekly chart, right? It turned grey and then turned green last week. But now look at the daily chart. Okay, massive, massive, massive upward move. Look at the 4 hour chart, more congestion here as it's fighting, but look at the 15-minute today. Okay, here, testing as the market's going up in harmony with the daily and weekly trend. So for those of you who said bull market, absolutely. Now, Park, great question, right? A load of you in this room are going to be trading stocks. And I'm looking at currencies at the moment, or futures. Now, this is one of the problems, unfortunately, that we have as a business. And this is a difficult one to deal with, is that, and this is a problem actually, is this system works for stocks, futures, Forex, commodities. It works for pretty much everything. So let me just quickly ask another question for you to type in. Based on, let's actually just go to another one that I was looking at earlier. And there we go. Right, just type in, do you think this particular instrument here, Palladium, is bullish or bearish or neutral? What do you think? Bullish, bearish or neutral? And I'll just go and grab a glass of water while you're typing that in. Yeah, okay. Everyone's correct. Everyone said the same thing. It's bullish. Now let me go back to the question on stocks trading. How many of you here actually, let me just ask you, how many of you here trade stocks? How many of you here trade stocks? Either US or... Okay, all right. That's given me something to show you then in a minute. I'm going to show you that this scanner works just as effectively in the stock market. In fact, I'd say sometimes, I wouldn't say more because it's not true, but just as effectively, and I'm using it for our fund. But I'm not looking at a 1 minute chart, and I'm not really looking at 5 minute charts. I'm using the following time frames in the scanner to make decisions using Danny's option strategy. And the time frames I'm using are the 15 minute, the 60 minute, the 4 hour, the daily, the weekly, and the monthly charts. And guess what? I did a call on Netflix a few weeks ago about why I thought that particular instrument, well, it's on YouTube. It was all based on the scanner. So I will show some stock charts today, and I'll show you a scan of the S&P 500 and then show you some of the stocks that are acting stronger than the index based on these principles of trend alignment. Now, I will say this. If you look at the time frames that I'm showing here, these are totally customizable in the system. They come preset with the ones that Tom Williams and I used. But it doesn't mean you can't add time frames or put your own ones in. I have a customer who scalps Forex, and his time frames are 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, and 7 minute. And he's doing great because he's looking for small trend alignment and small time frames. And he's doing fine. So it's completely customizable to your style of trading. Yes, and if you're trading options on stocks in the US as well, works great. Mo's asking, if you're trading stocks, do you require a larger deposit than Forex? Well, I would say if you're going to invest in the stock market, you probably want to be with a minimum of $2,500 to $5,000 account, really. Whereas with Forex, we know you can trade with $100, $200. But you see, with stocks, if you're trading with options on stocks, you don't need as big a size as account. If you read Danny's book, he talks about that as well. So if you're interested in buying stocks, if you're interested in trading stocks and you don't have a large account, go and look at the options way of using options to trade stocks. There's a lot of traders out there that's doing it. So again, we'll just move through some of these fairly quickly. That is in congestion at the moment. You can see we've got grey, green, red, so we wouldn't want to do anything there. Similar scenario here. Okay, we've got mixed messages. Here, we're red on all these time frames, but we're green on the big time frames. So it's no trend alignment, but if someone was trading on a 3-minute chart and wants to scalp, well, certainly here, if we look at the NASDAQ, you've got a trap up move, right? Let's go and have a look at the actual chart of the NASDAQ. And we'll actually have a look on that chart to see what the market's done based on the small time frames. Let me shut all these down for a minute. Okay, so it was the NASDAQ, the NQ, 15-minute chart, and you can see the signal's dead on. It's in a downtrend here on the 15-minute. There's weakness in the background, which are these red signals. You've got a lot of weakness over the top here, so there's a lot of selling that's happened up here. And of course, we've got the trap up move. And look, the NASDAQ has fallen for the last hour because of it. From 5.1, where did that close? About 5, so not massively, a couple of points. But it shows you here where the weakness is. And look at the trending system. Negative, negative, negative. If you go to the 5-minute chart, you've got all the same things coming in. Weakness. Okay. And here's a good example of what I meant earlier. By high volume bars followed by low volume bars at the same price level. Here's the high volume bar with a red signal on it. Here we go into the bar. We're really pushed into this price. But now there's low volume, which is called no demand, no interest in the higher price at that level. Okay. George, my strategies are in the trading plan that's at tradetowin.com. They're all there. I'm not hiding anything. That's the strategies I use. They're in the trading plan. Go and look at it. It's at tradetowin.com. If you go there and you scroll down here, click on this button here. The question was, can you show us strategies? Yeah. Click on that button. Here's my trading plan with the strategies. I'm not hiding anything, right? I'm not charging for this. This is my trading plan. Okay. It talks about the signals I look for, the currencies that I trade, the stocks that I trade, the commodities that I trade, the stocks that I specialize in. Then it talks about my strategies and time frames. Then it gives the time frames, and I can't be any more specific than that. Hello, Plarman. Nice to see you. Yeah, Robert, I saw that on On Netflix, yeah. So there it is. It's there for you. TradeToWin.com. That's where you've got to go. It's all there. It's a new site. It was only put together yesterday. www, easy to remember, Trade to Win. There's no sales pitch on there. There's nothing you can buy from it. We're giving it to you to help you. The only thing we're going to ask at the end of it is if you want to help AJ and Gideon, please could you donate? That's all we ask. So going back to the chart, you can clearly see here why this weakness appears on these up bars like this. Now, I want to short this market if I see another principle appear of weakness because it's in a downtrend on the 15-minute, but we've got a slight problem. Look at the 60-minute chart. It's going the opposite direction. It's going up, and we've got signs of strength appearing. So would that be the highest probability trade to short it? Only for a very short period of time. You wouldn't want to be in the trade for very long here because you're going against the big trend. But someone asked me, they said, Gavin, if the time frames are not all aligning in every time frame, could I still trade it? Of course you can. It's down to your risk profile. What you really want to find is a trade where everything is moving in the same direction. That's what you want to try to find, where everything is moving in the same direction. So what we'll do, let's start off then. Let me just finish the scan confirm trade thought. So what we're doing is monitoring these different time frames to confirm that the market is trending in the direction that you're trying to trade. Thank you, James, for your comment. Appreciate it. Then we want to show when the market is in congestion. What congestion means? It means that one trend is up, the other one's down, the other one's up, the other one's down. That means don't trade because it's easy to show you where to take trades. I'm going to show you today where you don't trade. And we're going to go through and we're going to drill down in Forex and futures, and we'll look at stocks as well where you don't trade. When the scanner is misaligned, meaning it's different colors in different time frames, no trade. Don't trade it. When the scanner is aligned in different time frames and it's all the same color, it's a setup possibly, but you still have to do the analysis. And remember, in MT4 and Sierra Charts and now NinjaTrader and TradeStation, you can get visual and audible alerts when a trade setup has been found and located. Then, when you've actually seen the principle, there is a bar information window that tells you what the analysis is that you can read. So it's intuitive. It helps you. And remember that each VSA indicator or signal, if you want to call it that, I don't like the word signal, I prefer the word indicator, has a number associated with it with a description of the market conditions that caused the indicator to appear. So let's go and have a look at that. So remember what I said at the beginning, the market participants really, well, you can call them the winners and the losers if you want. You've got the herd that do what a group would do. They lose, basically. They all follow what they think is going to make. I'll give you an example of the group at work. 2011, everyone was buying gold, saying gold was a safe haven, and gold spectacularly collapsed, as I forecast at the time. That's what the herd do. Smart money, right, recognise that this group are going to lose money, and they take full advantage of that group, which is why at Trade Guider, we want you to be trading with the smart money, the predatory traders. And we make no apologies for using the wolf as the analogy there, because that's how it is. The Wolf of Wall Street, the film, was a very good title for a film, because that's what you're up against. If you want to make it in the market, you've got to think like a predator and not the prey. So going back to the charts, what we're now going to do, we're going to go first of all to the Forex charts, and we're going to do some scans. And I'm then going to and again, just let me know when you can see my screen. Okay, you should be able to see the screen now. Okay, can everyone see the screen there before I move on? You should be able to see the MT4 platform here. This is MT4 now I'm using. Yeah, Park, let me come to that in a minute. I'll come to the Park. I see your questions. If you're using Schwab, you can actually use Sierra charts, which I'm actually currently using as well, because they support Sierra charts, and then all you need to do is buy the scanner if you haven't got it. But I mean, I know you're a long-standing customer, so you'll need to contact Laura, and she can send you the details of that. Now, can everyone see the screen? Just make sure before I move on. Now, this is the active trades. This is my account, active trades. This is running live at the moment. You can see I've got all these charts being monitored. What I'm going to do here is I'm going to bring up the scan manager, and let's just reset that. All right, so now I've done the same thing here as I did in the futures contracts, but this is now spot Forex with all the major and the minor pairs. What I'm going to go through each scan, which you can see uses the weekly, the daily, the 4-hour, the hourly, 30, 15, 5 and 1. And I'm going to ask you to look at the right edge of the chart here. And based on all these trends, I'm going to say trade to the long side, trade to the short side, or no trade at the moment. I want you to tell me what you say. So it's either no trade, just type in L for long, or S for short, or NT for no trade. So let's look at the British pound Canadian. We can see weekly down, daily grey and green, 4-hour green, 1-hour grey and red, 30-minute red, 15-minute mix. Trade, sorry, long, short, no trade. Remember, NT means no trade. Okay, the correct answer here is no trade. So those of you that typed it in got that right. Okay, interesting one. Euro, New Zealand dollar. Now remember, I'm talking about pressing the button right now, not waiting an hour, but pressing the button right now. Okay, so we're going to say trade, long, short, no trade. What do we think? Long, short, no trade. Well, actually here, you've got a bit of a conundrum, haven't you? Because let's have a look at the weekly chart. That's definitely down. Let's look at the daily chart over here, right? If I click on an indicator in the scanner, we can see 2 weeks ago, no demand. It's very much down. We can see the 4 hours definitely down. We can see the hourly is definitely down. And this last hour, we've got VH, which means very high volume, and a sign of weakness has appeared. We also note that the 30-minute chart is down, but look at what's happening on the 15-minute chart. An upthrust and supply, and over here, a reversal. Now, if this carries on falling, these will begin to turn red. You can see we've already had one on the 1-minute chart. It's started to turn red. Now, if in the next hour, that turns red, that turns red, and that turns red, I'm going to ask the same question. Imagine we're an hour ahead now, and these are all red in alignment with these. Would you be short, long, or no trade at that point? Exactly. John, you start, each colour box is the time frame that it represents. So here you see it says Euro, New Zealand dollar weekly, which means each box represents a week of data. And the proprietary system, which is Trade Guider system, shows me that we're in a bear market on the weekly chart. Same, it says daily, each box here represents a day's worth of data. 1 minute, M1 means 1 minute. Each box represents 1 minute's worth of data. And over here, look, you can see every time a minute falls, we'll have a minute. So the same with all of these. They're all the same time frame. Here's another question. Euro, Japanese yen, right? Imagine I'm about to press the button. Okay. Long, short, no trade. What do we think? Long, short, no trade. Yeah, if it depends on the time frame, look, John. If it says weekly, each box, so that would be last week, that would be the week before, that would be the week before. If you look at the 4-hour chart, which is H4, H is hour, 4 is the time frame, then that would have appeared 4, 8, 12, 16 hours ago. So 16 hours ago, in the euro yen, we had what we call no demand, and that's why it started to fall. But you're right, there's no trade here yet because it's being marked up on the smaller time frame. Now this should be fairly easy now for all of you. Long, short, no trade. Euro Swissy, which I'm currently in. Long, short, no trade. Euro Swissy. No brainer, isn't it? No brainer. Correct. Let's try another one. I mean, you can see why. Look, here's your trap up move. Okay, on the Euro Swissy. All right, and we'll come back. We'll actually look at this chart in a minute. Well, let me go through the. I don't want to break my thought process. Let me continue. All right. Euro US dollar. Long, short, no trade. Again, participate in this because you'll start to see what we're seeing. Yep. Yep. It's no trade here at the moment. Yes, potentially there's a long trade coming, but it's not here yet. I'm talking about right now. That just says to me there's no trade there. Okay, Euro Canadian. Long, short, no trade. Look, I mean, you're all getting this. This is exactly what this software does. It tells you when not to trade. Isn't that a wonderful thing? Don't trade it. You're going to put your money at risk that you don't need to. Okay. Swiss yen. Long, short, no trade. Yeah, sorry, I'm going to miss some questions here because, I mean, we've literally got a full room and everyone's typing in. But Thangavalu says, so on the Euro Swissy, where all the boxes are red, is that a scalp trade or a swing trade? It's a good question. If the red VSA signal came up on a 15-minute chart or an hourly chart, then it's a swing trade. If it comes up on the 1-minute chart or the 5-minute chart, it's a scalp trade. Simple as that. Okay, let's move to the next one. Oh, this is an interesting one. Long, short, no trade. What do we think? Long, short, CAD Japanese yen. Long, short, no trade. Well, I'm going to have to say here, it's almost aligning on the hourly chart with two very clear principles on the CAD yen. See, I know the weekly has been going up, right? But the daily's turned. We can see we've had 1, 2, 3, 4, 5, 6. So we've had 7 red boxes in the last 8 days, only 1 grey box, and the last 5 days we're negative. We're completely negative apart from here for the last 2 days on the 4-hour. We're in a horrible mixed bag on the hourly, but everything's starting to roll over on the small time frames. As you can see, red, 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 red just appeared on the 30. So if in the next hour that turns red with that in the background, then that's a short. But it's not short now. You couldn't trade it now. You'd have to wait. Okay, so we get the same idea here. No trade. No trade there. Potential long on the Aussie CAD, but it's still in congestion in this middle one. Okay, pound yen, no trade. No trade. No trade. Aha. 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 A nice one. And some favourite principles of mine here. Now, what do we say here? Short, long, no trade. What do we reckon? Short, long, no trade. Right, I'll give you all a clue for anyone that thought that was a long trade, right? Look at the colour of all the time frames apart from the weekly. Red means short. Ah, okay, Al. There was 2 of you that typed in there to type. Okay, good. The gentleman that typed it in went, that was a typo. Yeah, it's short. It has to be. Look, and these principles here are no demand followed by failed tests. These are actually one of Tom's new signals that we tested. Look, no demand followed by testing. No demand, failed test. And that is a very serious sign of weakness in a downtrend. So here, we're looking for all the signs of weakness that turn a market. And that is one of them, the up thrust. And again, for those of you that are fairly new to this, the chart reading masterclass that I've given you has that explanation in it. Yeah, and Themistocles says, yes, the weekly, I'd like to see that turn over. I would almost guarantee by probably Monday of next week we'll have a red box in there, because look in here, no demand, no demand, no demand on the weekly chart. I'd be very surprised if that's the yen, it didn't turn over very, very quickly. Again, no trade. We can see this on the British pound. No trade on the US dollar Swissy. And again here, nothing on the pound Aussie. So that is using the system to find trade setups. Okay, now again, all you're going to do, just to be very pedantic, is you're going to come in. I'm not even switching on the Smart Center Pro here, John, at all. I'm just using the scanners that are already built into the software. And you can see here, if I click Scan Manager, it shows me what I'm scanning. And if I want to bring up a scanner for any one of these instruments, like the US dollar yen, now we said there was a potential short here because everything was red, okay? And we can see that the 1 minute's turned over. We can see there's some weakness around. So we want to look at this chart, the US dollar Japanese yen, okay? So we come over here to the chart itself. We can see it's in a downtrend, okay? But I want to change the time frame. So we'll put the 15-minute chart up by clicking on the time frame in MT4. And we can clearly see why this is in a really nice downtrend, okay? This is a very good example for, Robin asked, can you show me weakness in the background? This is a classic double top, okay? You've got, if you are into chart patterns, this is a chart pattern which will turn a market to the downside. Look at the volume. This is in Forex, right? Now, I'm also going to prove to you a point here. I'm going to do it in the euro as well. Right, we'll do the euro at the same time in a minute. So this is the yen Forex. We can see it's moved up, 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 up. Look at the volume coming in. High volume. The black line is an average volume line. Very unusually high volume. The market goes up, but we close in the middle of the bar on quite a wide spread. And if I click on here, we can see the volume is less than the previous two bars here. So as it's gone up, the volume is declining. That's what we call no demand. And it's confirmed because the next bar closes lower. Well, when we refer to a lower close, we call it a down bar. Okay, a down bar means it's closed lower than the close of the previous bar. We come back up to that area after some buying in the future. Supply, big volume coming in this time. Closed in the middle, next bar is closed lower. If the next bar is down, which it is, closing near its lows, this confirms the weakness. And look at where we're at right now. And again, over here, the upthrust. Into this area of high volume here, we come over, no demand, low volume, and upthrust, and down we go. So this is what we call weakness. Any red signal in the software is what we call a sign of weakness, SOW. Any green indicator is known as a sign of strength, okay? Princess, could you take a trade on that no demand bar? You would wait, okay, until the smaller time frames turn over. So actually, you would be looking to go short anywhere in here after the no demand bar. And if you went to the 5-minute chart, let's look at the time that came in. So that would have been this morning at around 10 a.m. London. Go to the 5-minute chart to see if there's a principle around that time. So I'm just going down a time frame now. And here you go. So you've got the market moving down here, moves back up. So there's one no demand bar here. And remember, this is the 5-minute chart. So there you've got your supply coming in the background over here. You can see it quite clearly. Let me just put that up here. Okay, this is now the 5-minute chart. Here's your same double top that you saw on the 15. You've got an upthrust over here. You've got what we call supply coming in. That's selling coming into the market. And here the support line has been taken out. Everything's red. Everything's pushing lower, and everything in the trending system is red. This is why it's falling. That's why it's a weak market. Correct, Michael. That's when you wait for weakness. When everything's there, you wait for the weakness to appear. That's right. Hopefully we can show that. Graham says, did you wait for the 25 bar count from the high volume bar, or would you take the VSA signal? I haven't taken the trade in this instrument, funnily enough, but no, in this instance, what you want to do is look at the scanner again. Okay, put up the scanner. You can see very clearly that everything is trending down, right? So if you didn't want to, I mean, any sign of weakness that appears, I mean, here's the big one on the 15-minute chart, okay? So imagine you'd seen that up thrust appear. Everything then turned red on the 1 and the 5. As soon as that 15-minute chart started to turn red, you'd look for shorts there. Because in the background, you've got weakness. Look at the hourly chart, right? Trap up move. Go to the 1 hour chart, look for that signal, right? Here's the 1 hour chart. Remember, trap up moves do exactly what they say. They trap traders into poor positions. Okay, and let's put up. There it is, the trap up move. Look at the volume associated with it. Absolutely massive. Okay, that is the trap up move. This is weakness in the background on the hourly. The market drifts sideways. Look at the volume as the market tries to go up and take out this top. Look at the volume. There's nothing, there's no interest. And this is why we fall. Now, I want to show you now why tick volume absolutely, definitely works. And I'm going to show you two charts now. The first chart I'm going to show you is going to be the euro. Let me just find the chart first, so bear with me. Okay. And we'll use the 1 hour chart. Okay. Now, 1 hour chart of the euro. Let's put up the scanner. Okay. Ask you all a question on this euro chart. Long, short, no trade. Long, short, no trade. Correct. Absolutely correct. I would say there, you've absolutely got no trade at the moment. Yep. Yep. Now, notice down here, you've got three principles coming into the downside. Stopping volume, and over here, a test of this area, and that's why it's rallying away. So over here, you can see the market's going higher because on the 30-minute chart, we've got what's called a bottom reversal. Okay, so let's put the 30-minute chart up and show you that. Okay, so what we've seen here is why this market's rallying is because of the volume on this down bar here on the 30-minute. You've got a reversal and then you've got no supply. You've got a test, low volume test into this area and the market's rallied away. Okay, so we can see the very high volume coming in on the downside followed by the low volume. Can you all see that, by the way? Can you see what I'm showing you here? Yeah, the ticks, what are the ticks in the bars? They're the closing price, John. And if you're not sure, when you go and look at the video that we've done, it talks about volume spread analysis, looks at the volume, the high and the low of the bar, and the tick is the closing price. It either closes near the top or near the bottom. It's all relevant. Now, Remember I mentioned, now this particular currency pair moves in the same direction as the futures contract of the same pair. So you can see it's been moved down, and then we've got high volume on a down bar followed by a test and a rally. Now I'm going to show you now the same chart, but this time using exchange traded volume from the Chicago Mercantile Exchange. Same chart, but in a futures contract. So sorry, forget same chart, same currency pair, but this time instead of spot Forex, it's traded on the Chicago Mercantile Exchange futures contract. So it's the 6E 30-minute chart. And I'll just show you that the same volume that we saw, the high volume and the low volume, which we saw in spot Forex, came in exactly almost the same time. Well, it was the same time. This is the 30-minute chart, and the same reaction. Here and here. Okay, look at the volume. And here, stopping volume. All of that here is exactly what we saw in the Forex market with the same reaction. So tick volume in spot Forex absolutely works. It has to work, and it does work. Right, we've covered futures, we've covered Forex, looking at these charts. We've looked at trend alignment. If we look at the ES, we take a longer term view of the ES. You can see on the weekly chart where the buyings come in, here and down here. Okay, and then again down here when Mr. Trump got elected, this was buying coming in. It's a reversal, and we've had the Trump rally. We're nearly up to 2,300 on the S&P. This is still bullish at the moment. However, the question came in, how would we use this for stocks? Assuming we want to either buy options, sell options in stocks, or indeed we want to use buy common stock, right? Well, the first thing we want to do, if you read Danny's book, it's the same thing, is scan using our end of day software program, which I'm about to show you, to find stocks that are strong or weak based on the parent index. Now, in order to do that, I'm going to show you what I do. I'm going to download my data from Metastock. And let me just put this on for you. Okay, and tell me when you can see the downloader. So you should be able to see in a minute the downloader of Metastock. And what I'm going to do is I'm going to download the data onto my hard drive of my computer and then scan it. Okay, so Andres says yeah, well, Andres, that's very simple to explain. If the market's falling and everything's red, a reversal bar will happen at the bottom of the market, so everything will be red because that's where reversals happen. So that is correct. But you wouldn't trade it. You'd wait for the 1 minute, 5 minute to turn green. Gene says, does this work with ETFs? Very well with ETFs. In fact, I mean, a lot of our customers are trading on the ETFs with this. But Andres' question, just to cover it, said he was looking at the 2-bar reversal, which is a green signal when the market's been going up in the euro. But in the scanner, on the 15-minute, the hourly, everything was red because it was falling. That is correct because a reversal bar in VSA happens as the market falls. Okay, so that's why it's red. Now, after a reversal, you would expect the smaller time frames to begin to turn green and you'd start to look for long trades. That's how it works. And Andy, there's nothing on the S&P at the moment at all, other than, but there is a few stocks that we've got to watch, and I'll show you that in a minute. Now, what I'm going to do is let's put the download prices section in. And while we're doing that, I'm just going to open my end of day software. And what we'll do, while we're doing that, I'm going to launch TradeStation. While that data is loading, so it'll just take a couple of minutes. And you might hear, when I launch the TradeStation software, you might actually hear some trade alerts going off in the background. Don't let that put you off. They're stock trade alerts that I've pre-programmed in for the hedge fund. So you probably will hear the alerts going off in the background, but don't worry about those. Okay. Right, I'm just logging in now, and then we'll just have a quick look here. Okay, let's close that back down. Just let that load. Yeah, I can see quite a few questions coming. I'll come to those at the end. Okay, there's some trade alerts coming in here. While we're just waiting for that data to download, I will actually show you something that's quite interesting on the British pound. Okay, so again, I'm just going to swap screens for a second while that data's loading. And you'll see in the bottom corner here these TradeStation alerts coming into me. Don't worry about them for the moment. I'm not going to explain them right now. They're for stock. Okay, so John's asking me a question regarding TradeStation, and you know, why would I use TradeStation instead of MT4? Well, MT4 doesn't do end of day stocks the same way as TradeStation does. So if you've got MT4, there's more limitations with the amount of data that you can get in the stock market. So I personally use either Sierra Chart, which is a trading platform. In fact, it's the one you've just seen here. Right, this is actually Infinity Charts, but it is actually Sierra Charts, and they've just white labeled it. Now, this is the British pound that you can see here that I'm following, because we've had a very interesting move of support down here. Look at the volume on the downside. This is a VSA principle down here. The market was negative for a long time, right? And then suddenly a lot of buying started to come in, just as they said, actually. Let me just erase these for you, and I'll show you how this is setting up. And what we can see on the British pound, that this is the 60-minute chart, that 3 hours ago we had a test and it's rallied right up to the top of this bar away from that test. Now, if we put the scanners up and we put the pound up, okay, you're going to see that this is very close. Now, let me ask you a question here. What do you think I'm looking for here, long or short on the British pound in the next 2 days? Correct. I'm going to be looking for longs. Here's what, in fact, even possibly now there might be a setup because of this that's just come in. Okay, so we've got, this is green, this is green, this is green. On the daily chart yesterday, we had a test and everything's starting to line up. So if we go to the daily chart first, what we can see, here's the big buying that came in on these two bars. Yesterday, a test. And at the moment, we're responding to that test. So it's actually, we responded to a test here, went up, we came back down into the previous area of testing, and it's popping up. Now, the 4-hour chart had a big move up, then it started to move sideways a little bit. The 60-minute chart, well, that looks a lot more interesting. Here's your buying coming in. It tells you that. Potential professional buying. It's high volume on the down move. We close off the low of the bar, but this is the important bar right here, because it's a low volume test. You can see the volume is very low. They test that level, and that's why you get this big upward move. So I wouldn't be surprised to see this move much higher before it starts to correct again. We could get all the way back up to where we had this serious weakness that caused this big fall. Okay, there's where the big volume, see how important big volume is. Big volume, okay, market collapses. Big volume, second biggest volume on the chart, market reaccumulates and goes back up. And if we wanted to trade this right now to see if there's a setup, well, then it would be to the long side, and I would be looking for any sign of strength on these smaller time frames. At the moment, on the 1 minute chart, we made a higher high. We're going sideways. Here's where the previous area of buying came in. It moved it up once, and now it's back down here. But this could easily make another leg up. So I'll keep an eye on it. Okay, let's go back then and just check to see if we've got the data. Okay, so at the moment there's a potential long trade on the British pound, and we're just waiting for the principal to appear. And actually, I will turn on Smart Center Pro for that.
Trend alignment to the upside has arrived.
Okay. All right. Okay, let's go back to the screen here and make sure we can all see this. John, we do have a live trading room, yes, and we do have real-time alerts as well. So, and John, in fact, you'd be a very good person to have a look at the new website that we've just put up with the different options. If you can give me some feedback from that, I can, and anyone that gives us good feedback will get a discount voucher off our products. So I'll put the new website up in a minute. Now, first of all, can everyone see my screen as I start to show you these setups here? You should be able to see the end of day software. This is for the people who were originally talking about stocks. Okay, good. Right, now what we're going to do here, right, we're going to do a stock scan, okay, and we're going to do it in the S&P, the 500, okay. Now I'm using my end of day version 4 of the software, which is the latest version. I've downloaded my data onto my hard drive. This is my secondary computer, and I do this every single Sunday night before I trade, and I'm looking for stocks now that I'm either going to short or go long on, depending on what the market's telling me it's doing. At the moment, I happen to know that the market overall is bullish, so I've been looking for stocks that are acting stronger than the index, but we're very, very, very vulnerable to a corrective move, which means I'm also looking at stocks that are acting weak because they'll fall first, and I'll make money much. If we have a corrective move in the market, these will get into the strike zone on the put options much quicker. So I'm going to come to the scanners up here. I'm going to scan the Metastock data that I've just downloaded. I'm going to load the parent index, which of course is the S&P 500 for the moment. You can use any index that you've got data for, which includes the Kuala Lumpur exchange. It can be Singapore, Hong Kong, China, whatever you can get data for if you've got the exchange. You know, like the FTSE 150, the 100, the 250, whatever, you can do that as well. Check that yesterday's data is downloaded, which it is, up to the 7th. Now I'm going to add all of the stocks in the index. And we're going to call it Gavin Scan, and we're going to date it today, which is the 8th of Feb. Okay, I've already done that. Sorry, I think it's jumped to done a bit. So, aha, that's what I missed. Okay, I'm going to leave that as standard, which is basically the wave count in the range.
Sign of strength has arrived.
And we're going to look for 2 points in the wave, and then I'll just call this GDH 8 of Feb. And now we're going to do the scan. Now, while we're doing the scan, I've had some interesting alerts coming in. just see where that is. Oh dear me, that looks very weak. Right, interesting. Very
Sign of
interesting.
strength has arrived.
Yeah, I'm just looking at the Japanese yen. The 6J futures contract has got an awful lot of volume that's just come in to the upside here. So I'm going to keep a close eye on that one. I'll just show you the chart and see if it triggers on the smaller time frame. Just starting to roll now. So this is a good example now where the market's been, let me just show you the chart while the scan's continuing to go here. This is actually something happening right now. Now, can everyone see the chart of the yen here? This is something that I look for all the time to try to look for short trades. This would be against a trend, but I'd go to a 1 minute chart to get an entry. Now, can everyone see the screen before I move on with this? Jerry, I just saw that. Thank you very much indeed. I appreciate that. Yeah, Hector says, can you scan a personal watch list that you set up? Yes, you can. Of course you can. Yeah, no problem. Yeah, Gar, I'm looking at that. That's what I'm saying. And the British pound is very interesting at the moment. I'm watching that very, very closely because of that big volume bar that came in, as you said, on the 17th of January. Let's wait and see if it does what I think it's going to do. But before I do, let me show you this chart, which is very, very interesting. Now, first of all, this is the weekly chart of the yen. Right now, we can see where the weakness is over here. Hidden selling, no demand, trap up move, right? So the weekly chart is definitely down. You can see the diamonds are red, but a few weeks ago we had some buying coming in, right? Green bar, pretty high volume, and the market not rallies. Okay, now here we are on Wednesday, right, of the trading week, but there's hardly any volume as this market's trying to go up on the weekly chart. Daily chart, okay, yes, it's pushing higher, but look in the background where this market was sold off here and here, a reversal, and down we've come. We've pushed up. It's almost a 50% retracement area. The 4-hour chart, which we can see, again, you're going to notice here on the 4-hour chart, okay, we can see the same thing. And then 15-minute chart, massive markup here. Now, if we look very, very closely at some of the other currency pairs, like the Aussie, the pound, the Canadian, we're going to start looking for high volume that's coming in to match what we're currently seeing. That was the yen. We're seeing very high volume coming in on all the currency pairs at the moment, on the majority of them. Now, here you can see very high volume. Okay, and here, again, if we go to the Swiss franc, very high volume. Now, can anyone tell me why they think that could be? Why is this high volume happening? Can anyone tell me why that is happening right now? There's a very good reason for it, by the way. Andrew, I do trade the FTSE futures. Yes, I do. There's a very good reason that this high volume started to appear. Okay, well, there's a couple of things. First of all, we are now exactly 1 hour from the London fix, which is the fix of the interest rate known as LIBOR. Okay, that's the first thing. Secondly, look at the volume on this bar, right? See? Now that is broken this old area, and I can tell you there's a hell of a lot of traders here that will be going long as that breaks out. You've also, of course, got the US market that's just opened, right? But what we know is weakness, when it appears, happens as the market rallies like this. And markets don't like very high volume like that coming in. Now, what we'll need to see happen is these smaller time frames confirming it. Well, we've seen it here. Supply entering the market. Now they're testing this level right now. If that test fails, this will fall very spectacularly. And here on the 1 minute chart, we can start to see the diamonds turning. I think I've got filled as well. Let me just check. Yes, I've been filled. I'm waiting for that to happen. So I'm filled at 89.50. And what we're waiting for now, and we'll just follow this through, because this is a classic principle where the market gets completely marked up. And what we want to see now on the smaller time frame is these diamonds continue to start to, this is the Japanese yen, the yen versus the US dollar. Okay, it's the yen versus the US dollar. I'll come back to the stocks in a second, because what I want to try and show you now is actual principles of weakness as they appear. Remember, I'm going to be looking for things called no demand bars, up thrusts. Those are the key things I'm looking for. And this is the high volume on the 1 minute chart where they marked it up. Look, so it took them about 10 minutes to mark it up. The bottom of that bar is going to act as support temporarily. As you'll see. All right, so they're going to try and hold it. If it breaks this support line, it'll come with a lot of volume and it'll push lower fairly quickly. So all we're going to do now, we're looking at the color of the diamonds to make sure they're staying in line with this. If those change and they turn green, I'll scratch the trade out. If they stay red and we break this lower line, then this market will fall very, very quickly. And again, when you trade like these things, when you trade like this, what we're looking at all the time is, even on a small time frame, we saw on the big one, the 15-minute chart, where the weakness is. If the market wants to go back up and retest this area, as we call it, it's a reverse test, we call that no demand. But look at the volume, it's absolutely enormous. Now we have to look back on the 4-hour chart to say, well, are we at an area of previous resistance? Well, look, there's the old high that we can see, look, came down quite a way off that high, and now we've bounced off there. And the question is now, will this is where the weakness is, this is where the selling started. It hasn't yet what we call mushroomed over on the big time frame. But if this is the start of a distribution area and this begins to break down, it will break down fairly rapidly. And again, you'll see this on the smaller time frame. Now, if you're on the spot market, this will be doing the opposite because it's inversed. So it wouldn't be going down, it would be going up in the spot. Don't remember that the futures contract is the reverse, it's the opposite of the Japanese yen US dollar Forex contract. Now notice the volume, what I said it would come in. What will happen if this is genuine weakness here is we'll have an increase in volume and a widespread down bar like this, pushing lower through this area. That's what it will need to take this area out. This comes from experience. You'll learn this, that when they start to mushroom the market over, it starts on the smaller time frame. This is the 1 minute time frame. And then it starts to feed through onto the 5 minute, the 15 minute. And that takes time for it to happen. It doesn't happen in minutes. This could take an hour for it to happen. It might not happen at all. And if it doesn't, close the trade. These are decisions you make as a trader when you're trading. Okay, once you're in a trade, you've always, my first priority when I'm in the trade, if it moves in my favor, most of you know, stop to break even. Now, there's not a lot of trading opportunities today. Other than the Forex, there's a few Forex trades, but there's not a lot in futures. I mean, I'm just looking at the NASDAQ here. They marked it down and then bought it back and it's popped straight back up. So this is whipsawing a lot in the NASDAQ. Same in the ES. Yeah, if we go to the 15-minute chart, same thing. They marked it down and there's buying coming in down here. You can see the green signals and it's just whipsawing around at the moment. And again, at the moment here, you can see what I mean. The importance of this high volume bar is being seen, is they're trying to support it here. And I'm just watching to see that these diamonds are still red. So it's not moving anywhere yet. Again, we notice the thermometer has turned red, which means we're still bearish. The medium-term trending system on the 1 minute is aligning with the short-term trending system. But again, again, we've just come past, we're 11 minutes past the 9 o'clock. We've had the crude oil report, not really doing much at the moment. So let's see, we'll watch that, see what happens. I want to go back to the stock scan quickly. I can show you on Forex what's happening on Forex in the yen as well. Okay, let's just show this. Put that on a 5-minute chart. Okay, so we can see here, this is the US dollar Japanese yen 5-minute chart, and we can see that this is starting to rally. There's the strength, which is the opposite of the weakness that we saw in the other instrument. Okay, and if I put up the 1-minute chart, which is another time frame we can use here, you'll see that as the futures falls, this will start to rally, which will confirm what I'm thinking is going to happen, an increase in volume. So there we go. We can see that this is now green and it's pushing higher. There's your test on the yen, which came in about 4 minutes ago. And lo and behold, that's going up. And my trade has just done exactly what I thought it would do on the futures. Here's your increase in volume that I talked about, pushing through the old area here to the left. Okay, so there it is. Okay, this is, you'll learn this. You'll learn these trades. This is what we'll teach you. This is very common when you see an upthrust on a big time frame, that you see the market being marked up, and now look, that's the very high volume, close near the low, okay, comes all the way down. Now the next area that it's going to come down to will be the 8936 level. Okay, that will be the area that it will look at. Notice that the thermometer and the medium-term trending system turned green, and in the spot Forex you could have gone long because these are inversed. That's what I'm saying. Not all of the currency pairs are, but in futures we had the key principle, which I wanted to teach you today. I didn't realize it was going to give me, well, I'm blessed, because that is a key principle to show you today in this lesson, is where to trade an upthrust at an old resistance point to the short side. It doesn't get clearer than what I'm showing you. And now, call me a believer in the law of attraction. I woke up this morning in a very good mood, very positive, saying I'm going to need something really convincing to show these people today that A, I can trade, and B, shows a principle at work that we can see. Now, first of all, you can see where we're currently at. Now, what I will do here, as always, because I'm only trading a small account publicly, get rid of the auto center there. Okay, I'm just going to move my target, which was my initial profit target of 8936. I'm actually going to move that down in case this runs.
Sign of strength has arrived.
Okay, and actually that was what alerted me to it, but I'm not going to show you the Smart Center Pro at the moment. And what I want to do now is take at least there's my stop. So stop's now through to 49. So I'm not going to lose any money on the trade. That's my first priority. And now we're going to see if we get a runner. Now the runner will happen. See this widespread down bar here? We would look for what we call a no demand bar, which would push up. Now, what I've done here, I mean, I'm going to try and lock in a little bit more here. Actually, let's lock in 47. So I've got three points there. One, two, three. Yeah, so that's fine. Now, if I'm trading a sizable account, which I do trade, obviously we wouldn't be trading one lot. This is to show you how you do it with a small account, right? You don't have to be greedy with the market. I mean, this trade has been running, I think I was filled 11 minutes ago on this. Interesting enough, we've also had an alert here on the British pound. Yeah, so that could pop up as well, which would be interesting. So let's go and have a quick look at that as well, very quickly. I'll try not to jump around too much, but now you see we've got some movement coming in. No, wouldn't want to do anything at the moment on the pound. This is all gone grey. Not the best trade. I think we'll stick with the yen for the moment and see where we're at. I'd like to show you a principle that actually appears live, if we can, called no demand. I don't know if we're going to see it. See, after a big down move like this, you're vulnerable to a pop, which is why I like to at least protect some profit. And I'm also looking at the Forex market now, which has gone flat in Forex. So I'm actually using the Forex as a guide in my futures trade, even though I'm not in the Forex trade. I've just traded in futures at the moment. You can see here it is. This is the 1 minute yen. You can see we've had a 20, well, 1, 2, 3, 4, 5, 6, yeah, about 20 minutes. And now it's coming lower, which you'd expect. What I want to see, though, is a low volume test and then a rally, and that would bode well for my trade here. And you can see where the stop is at the moment. I'm at 47.50. So whatever happens, I've made a profitable trade on this first trade. If it pops, I'm okay. If it continues to go down, fine. This is how you trade. Yeah, you never ever go bust making profits in the market. That's what I always teach people. Whether you're trading one lot or 100 lots, it's the same thing. But it goes to show you the principle of the upthrust, which is one of the things that if you learn the upthrust as a principle, you'll see that when you see it, it's often at the top of a market, or it will turn the market as it has done here. And then I'm just following the trending system. Notice everything's still red. So everything's still red at the moment. Let's see if I get filled here, because it's very likely going to go up and no demand, and we'll get another trade on this. Okay, now we're also on the Forex market. Seeing a low volume test, and in futures, just get rid of that. And in futures, we can see here, we're right up to the bottom of that line, and I've got my stop right just above that line here, as you can see. Because if it breaks that line, it's probably likely to pop up, but it doesn't look like it wants to at the moment. So I've stayed with the trade. I've reduced my risk to profit. I've stayed with the red diamonds. Everything stayed red. Where I told you the importance of this high volume bar, you can see here they rejected it, and they've rejected it again because they can see there's distribution there. By the way, I'm not taking any questions at the moment, guys, because I just want to show you this setup. Most importantly, though, I talked about upthrusts and how important they are. Let me just delete this. I talked about upthrusts on Saturday, how important these principles are to recognise them, but I didn't think I'd see one like that on that sort of volume. That is a very, very key principle for you to learn. And in fact, we have a trader who Tom always affectionately said she was just a housewife. She never liked that, but because she's got 3 kids, Rita. And she trades these principles. She's not worried about trend. She's not worried about any of that. She just trades the principle. Now, again, it's a 15-minute chart. We've got 10 minutes to go. If this goes up on very low volume into this area, that will be yet another trade. I may add to the position if that does do that. Key level now is to take out this 89.40 area. And then my initial target based on my point and figure projection, which I won't talk about now, is 8936. As a level. Yes, we've got oil coming out. I think oil's already come out, hasn't it, Tom, I think? Because we've got the crude oil inventories coming out. 9 minutes now, that's right, Tom, thank you. And interestingly enough, we have now seen on the spot Forex what I'd expect to see, a low volume test. So the spot Forex is likely to rally. You can see it very clearly here. Again, I'll just show you what I'm looking at on the spot. Remember, I told you that the spot Forex would move up if the future moves down. Okay, and there we had the move up. We had an initial test of this level. And again, if you watch this, you'll probably see another test. And if it blows up to the upside, we will have a collapse in price in the future, if that actually happens. So here was your first test. We had a rally up to here. Second test, we pushed up. And now we're looking for another test on low volume at the top of that bar with another push up, if that happens. Again, you can see this, the opposite of futures. This is green. Okay, because remember, as I've already said, these are inversed. Okay, and there we have it. No supply, which should mean a fall now. If this pushes higher, my futures trade will fall rapidly. Okay, so it all makes sense, doesn't it? So you've got a short in the futures contract, and we're seeing in the rising market of the Forex, you can see here some buying came in down here. We changed behavior, we turned green. Test number 1, test number 2, test number 3, we call them no supply. It's the same thing. It's lack of selling pressure as the market falls in here. Question is, why do I just trade the small account publicly? The reason for that is we did trade a big account publicly once and it put people off. People are not used to seeing someone trading 20, 30, 50 lots. And a lot of the traders that we teach actually trade smaller accounts. I mean, we've got, when I say small, sort of $5,000 accounts. The account I trade publicly is a $5,000 account. So let's go back to the futures contract now, which is confirming pretty much what I already thought would happen. So we've got your upthrust in place. We've got change in behavior on the 1 minute chart. And what I'm trying to show you live is what we call a confirmation signal. I can't tell the market what to do. This is live. We're trading. This is a live account, just to be very clear. We're a registered company. When we trade, we're trading with real money. We're trading live. We're not trading on simulators. Let me be very clear on that. For those of you that have gone into trading rooms and they're claiming that they're trading real money, this is real money. Okay, this is when we're showing you these principles live, we're showing you them as the market unfolds, as you saw with the upthrust there, as you saw with the widespread down bar that I talked about, and as we saw here with moving the stock through the break even to the profitable area. And now we're waiting for this to either pop up and stop us out or run. And if it runs, I've got, again, no risk on the trade. Someone said, you don't sound at all stressed. I don't get stressed. No, because I'm already prepared. If you listen to my seminar on Saturday, you'll understand why I can do this in front of thousands of people. And there is no stress involved with it, because there isn't stress. It's just money. It's only money. Go and read Steve Jobs' final words that I read out on Saturday. Okay, don't get so wrapped up in it. It's a trade. I've taken a trade. I take trades every day. Most important thing for me, stop to break even, see if we can get into profit, which we've done. Now, at the moment, what we are seeing happening, I'm going to come back to the stock thing in a minute. A couple of you said, are you going to finish the stock thought? Yeah, I will, but you can't blame me for not taking this. Look at it. It's a clear principle. And in fact, if you look at the 1 minute chart, you can see it rolling beautifully here. You can see the importance of the high volume bar with the signal. You can see the mushrooming over, which I talk about in my book. Okay, the mushroom shape is here. You can see where we've come down to. They tested that level once and they've pushed it up. So this level that I gave you earlier is actually quite critical. As you can see, down at this level here, we break down to this 40 level. That's going to go all the way. But we've got to wait for it to happen. Fortunately, in Forex, they're marking it up. So everything is confirming my analysis that this trade is a good trade, and it will be a good trade because it's got everything from a VSA point of view that I would look for. It's got, someone said, weakness in the background. It's got weakness in the background. Yeah, it's got that giant upthrust on high volume. It's confirmed on the 5 minute chart up here, look. Okay, you've then got this confirmation, supply coming in. This indicator is based on the action of 2 bars. It's a high volume up bar, which is this one, massive volume, closing off the highs. It closes near the bottom. If that was all buying in that volume, we certainly couldn't close near the low. Couldn't happen. Right? It breaks the law of supply and demand. Okay, and all we're looking for now on the 15-minute chart is potentially what we call no demand. Okay, I'm not taking any questions at the moment, guys, because I'm trying to focus in on this, but I will do that. Robert's asking, with this setup, how much will it move? No idea. No idea. No, I don't. It could move. I mean, I've had trades which have moved, you know, 45, 50, 60 ticks. I've had moves that have been 2 or 3 ticks. I don't know. You don't know. The market will give you what it will give you. That's why I get the stop to break even and profit. I mean, sometimes you'll get this big move, it'll pop up and then pop back down again. That's trading for you. There is no certainty. Don't expect certainty as a trader. You ain't going to get it. What you are dealing with is risk management, knowing when a setup appears, understanding why weakness appears on these massive volume bars. Yeah. And hopefully we'll see, if we see no demand here, then this market will fall. But that's what I want to show you live. There's no point in me doing this in hindsight because it all looks wonderful, doesn't it? This is as it's happening. This is the setup. This is the reason. There is the volume. I told you how important high volume is. Yeah. Here we can see the importance of this trigger. Now there is a principle that's just appeared. I bet you that's no demand. Let me get rid of that. Now it needs to be confirmed, but that's exactly what I'd expect to see. Right, now the next bar has to close lower than that bar for a confirmation signal. But look at where it is. It's right on this area. But there is a bit of buying here. You see, don't ignore the signals. That's a bit of buying there. You can see the high volume, narrow spread. It's popped it up a little bit, which is why I protect my trade. Because markets don't just go in one direction. They go up and down and up and down and up and down. And I'm just trying to eke out profit where I can. And at the end of the day, look at my account and say I made profit today. That's it. That's what makes a good trader. Now you'll notice if this bar closes lower, that will turn solid red. That's called a confirmation signal. And I will almost guarantee you'll see the same thing on the 15-minute chart. Yeah, is this a counter trend trade against the bigger trend? It is, but it's based on this trending system on the 1 minute and the 5-minute charts rolling. You see here, the 5-minute red here. You've got an up bar here on low volume, but the reason for the short trade against this is this massive volume on the up bar. Yeah, here, where you can see the weakness. These 2 bars are weakness. So you can trade that, but you have to jump down to the smallest time frame possible to look for the principles. There's a principle now. No demand. Now, I would bet on the 15-minute chart we're going to see the same thing. Let's have a look, see if I'm right. I don't know. I can't tell you that it is or isn't going to appear. Let's have a look. So this bar here, with a minute to go, if it closes higher than that bar but the volume is less, that confirms what I think. It may just run. Sometimes these things just take off. With that amount of negativity and weakness above us, sometimes they just run and they go. Yeah. So this time it's very low volume. It's blue, which means it's closed higher. The software hasn't put a signal on it there, which is not particularly surprising because it closed on the low of the bar. That's still a good sign though. Now, if it breaks now, this will run very quickly and I'm going to have to chase it. Okay, which again, this is very likely with the no demand on the 1 minute. This is very likely to run. Now we know there's been previous support at this level. So we'll see if we get, this next bar has to close on its low, by the way. It must close on the low on an increase in volume. That's what I'd be looking for. James, I've made over $100 on this one trade, correct? With one contract, by the way. I don't usually trade one contract. I only do that publicly. Usually I'm trading more. Now, in effect, I haven't made it. I'm going to lock some in here now, look. because now it's moving. So I'm now down. My target was 36, which is just down here, but I moved the stop down further down to here to 24 in case it moves really quickly. So now that's what I've taken out the trade so far. I'd like to take 100 out of this trade because I think that's, so we're $12.50 here. Let's just protect that and see if we can get about $100 out of the trade. That would be nice if we can get that. At the moment now, what I'm looking for is more confirmation signals of the weakness. Now, the good thing about this trade now is it's profitable. Done. Okay. So there's the trade. It wasn't quite 100. Okay. One tick off it. That's fine. There'll be another opportunity. This is very likely to pop because we had buying down here, right? So I'm taking out what I can. There was a no demand bar. Here's the pop. They do this all the time. It's deliberate. They come in, they buy it, and then when you're short here, they come and mark you up, and you go, oh my goodness, I've get in again. That's all we do, just get in again. Now let's go back to the stop thing that we... Is there any questions, by the way, about that? Any questions at all? You made it look easy. What's difficult about that? I don't understand what's difficult. Let's review it. Let's review it. Okay, let's make sure we all understand why I took that trade short. Okay, because there's a number of reasons, right? First and foremost, right? We can see in the background on the weekly chart, right, the weakness that's above us on the weekly, and everything's red. Yes, we've had 4 or 5 weeks of upward movement, but I always look at the volume, and we're midweek, there's hardly any volume on this up bar. So there's not a lot of interest to the upside anyway. If I look at the daily chart, yes, we've got this weakness above us here. We've had a corrective move, but look at the spreads of the bars here starting to narrow, and we've got an old resistance line to the left here, which moved the market down before, and we're into the same area. So all I did was look at the smaller time frames. Do I see any unusual volume? Remember the footprint of the elephant? There is the elephant. Yeah, Gavin says he makes it look easy. It's not his fault. It's not difficult, guys. Once you've got this knowledge that I've got, you've got it with you for the rest of your life. You'll recognise what I see. That's a footprint. That's an elephant in the room. Okay? And this, again, if we get another sign of weakness here, these smaller time frames, which are starting to roll, will all roll. And then the 1 minute chart, you saw it for yourself. Short up here, everything was red, red, red. It's still red. It just, see this here was what they do. They mark it up. There'll be another opportunity, almost definitely. So, because I'm running out of time, let me go back to the stock scan. And we'll go over to the other screen, and then I'll just take some final questions here. I haven't lost anybody at the moment, so that's good. But by the way, this is the same chart now on the spot Forex market. You can see now that we had a sign of weakness appear, right, up at this old level. See this? Supply come in, and that's why it's falling. So if you now look at the futures contract, did Gavin do the right thing taking the profit? That comes an experience, you'll know this. The answer, of course, is yes. There we can see. Deliberately done, I'd be in a losing trade right now instead of making money out of the market. SJ says, how did I move the stop loss? Basically, how do I move my stop? It's real simple. In the software, once you enter a trade, right, you just left click and move it, and then let go of the mouse, and it puts the stop wherever you want it. So I started with an 11 tick stop loss. When it got to 11 ticks in my favour, moved it to break even, and then, well, you can see where the trade was. So I shorted it at 89.50 and got out at 89.43, right? And you can see now that actually would have been up to my entry, and I'd have been under pressure again. I'd be losing money had I not taken that profit out the trade, which is exactly what you should be doing as a trader, locking in profit where you can. Oh, how do I decide where to put the stop and price? Well, basically, I was using this bar here, and then the bottom of that bar, as you remember, I marked it out. As you can see, I put the stop above there initially as it began to fall, and then when it broke the low of that bar, brought the stop down, and then chased the price, and basically got out, I'll tell you what, not far off. It came down to about 89.39, and then it's popped, but that's very common. That's very, very common. And now it's popping back up again. Okay, let's go back to this. Okay. All right. So, looking at the scan, you can see here the strong stocks. Okay, and we can see the weak stocks as well. Okay, and they're all graded by levels. I'm not going to explain all that to you, but they're in. It talks about it in Danny's book if you buy his book, and you can see there's the weak stocks, there's the strong stocks. Okay, and if you click on any one, it'll bring up the chart. Okay, so there's a stock that's gapped up, got two signs of strength, as we can see. Netflix. Okay, this is one that I did a scan on 2 weeks ago in a live webinar. In fact, I think last week I did it as well. We talked about this was acting much stronger than the index and it would rally heavier. There you go. That's Netflix for you. And that's why it's rallied. Okay, now the question is, I want to trade that with the scanner and know when a test or no supply or something has come in on a smaller time frame, so you can go long, either buy the stock altogether as a common stock, or an options trade. Looking at a call option is a potential. So how do you do that? Well, what we do is we use TradeStation. Okay, and what I'll do here is I'll just show you that we've actually set this up as strong and weak stocks. Okay, and again, please, could you tell me when you can see my TradeStation chart with all the different things? If you could just tell me when you could see that, because it's on a different computer. Yeah, Harvinder, it has. Yeah, this is the one I was talking about on Saturday. This is Netflix, and we picked it out in the scanner on Saturday as a strong stock, if you remember. This is the one. And Netflix has rallied for the last 3 days. That's why I'm showing you this, yeah. This is the stock that we took. If you go back to the recording, you'll see it. If you haven't viewed the recording, it's at tradetowin.com. So let's have a look then at Netflix, okay? So here you can see it. All right, now at the moment, I say time frame wide, that's a 5-minute chart, but of course we don't want to use a 5-minute chart. We would use a different time frame, but it just goes to show you that it's been very bullish, and in fact, the trending system has been majority green, which says that the market is actually bullish here as it's rallying. So what we want to look for is signs of strength in a rally, and you can see here, no supply.
Sign of strength has arrived.
Okay, that's interesting. Okay, so you've got here no supply, okay, which is in a 5-minute chart. You can use any time frame that you actually want, okay, so you don't just have to use those time frames. I'm just having a look at the intervals here. So let's put up the one I particularly like to use is the 60-minute chart. All right, that's one of my favorite time frames for stocks. Now what we can see here is basically we've got very, very nice principles. We've got a sign of strength back here, which was about 24 hours ago. Now this is delayed data by 30 minutes, so don't use this as live data. This is 30 minutes, but that's the 60-minute chart. And the other one that I like to use as well is the 15-minute chart. Okay, so this is the one that I like to use the most for if you're doing options on stocks. What we can see here, very nice trend to the upside. It's green. Okay, we can see the alerts coming in here. We can see that the volume trending system is green. The thermometer's green. Everything's green. And what we notice here, here's some strength down here. If I click on control, it brings up the test signal. Over here, we've got another one, another test. And these are the things that we just saw in the Forex market of the Japanese yen testing as the market's rallying. Now, I've also got the scanners for each stock that I'm monitoring in the scanner manager. So if I want to look at all the stocks to decide if I'm going to buy or sell, it's a very easy way of doing it. Click on here. Okay, show hide all scanners. Okay, so I'm going to ignore the 5-minute chart. I only want you to look at the 15, 60, 240 daily and weekly chart. So ignore these ones here for the moment, right? So based on this particular chart, FOSL, would you be looking for shorts or puts or calls, which means buying? So based on this, would I be looking to short or go long based on this? Robin, I haven't tried that, but I could certainly look at it. But I haven't tried that. But yes, you could look at doing that as well. I just find this gives me, look, that's a weak stock. It was picked out in the scanner as weak. And yes, I agree. Here again, okay, LB, we'll ignore the 5 minute. Again here, you can see it's down on the monthly, down on the weekly. You've got no demand on the daily about a week ago. You've got a trap up move on the 4-hour chart. It's weak. It's gone down. This is how you're using it for stocks very effectively. Again here, look at this. This is one I wouldn't trade right now because it's mixed. Congested on the 60, negative on the 15, but mixed here. So a mixed bag. Again here, negative on these time frames. If this turned over to negative, that would go down. Same here, negative. These are the weak stocks we're looking at the moment. Again, same here, BBBY. This is Southwestern Energy, again negative. United Airlines, that's got bag holding on it. I would definitely be watching that very closely. That could easily pop up. In fact, that's one to put on the watch list, by the way. If that's got bag holding, this is why this is all turned green on the 15-minute chart. Someone's buying there. Again, negative on the big time frames, as you can see. Positive. See, everything's green, 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 green. Apart from the 15-minute chart, everything's positive there. Very negative, that one. Look at that. Apart from the weekly chart, everything is very ugly. Again, a bit of a mixed bag there. Very negative on rig. And I'll just ask you a question. Looking at that scanner here on Netflix, what would you think? Long or short on Netflix? Just using the 1560 4-hour daily. I mean, it's a no-brainer, isn't it? You don't need to be a mathematician to figure this stuff out. It really is. Yep. Very funny, Gar. I saw that. Right, let's now summarise where we're currently at. Now, first of all, we've put this course together and it's available. This particular video is going to be uploaded to YouTube and put on the Trade to Win website where this course is available for you. If you didn't already know about where this is, it's got my trading plan. It talks about the upthrust today that I just showed you in the live trade there. That principle is a very important one. So this course here is the thing you need to look at, which I would recommend you look at, is here, the top thing, which is the starter pack. If you're just getting started with this, click on that. And what you want to look at is this one here. That's 2 articles that you should definitely read from Earl Ehrenler and also from Tim Raymond. 2 traders that won competitions using the method that I've just shown you live. And this is Tim Raymond, a solitary trader. And he says here, just to summarise, in 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him. He was very reluctant to sell me his software. He said, trading's very difficult, you know. I insisted and agreed that I would pay £5,000 in instalments, Raymond says. These days, if I'm asked by someone who is starting out in advice for trade or trading for advice, the first place I send them is the Trade Guider website. For me, it demystified the markets to a great extent. That's what we're here to do for you. So before I wrap up and take any questions, a couple of things that I would ask. Let me first of all move to the other computer. I mentioned at the beginning that this course that we've put together, which culminated in this live trading session, was not charged for deliberately, because we wanted to raise money for a lovely little guy called Gideon, who is the son of our technical support head of technical support, AJ Robinson. Gideon was diagnosed with quite an aggressive form of cancer and has had to go through obviously lots of treatment, which of course is extremely expensive. And I won't say anything about the American healthcare system because I was part of it for 14 years of living in Chicago. But I've made it my mission to try to do everything I can for AJ and his family. And they've put together basically a GoFunding page. And so rather than charge for this event, all I've asked is if anyone, how much, even if it's a small amount of money or a large amount of money, if you could donate to Gideon's cause. Everything I've given you here, my time and all my, my book is there, everything to help you. All I'm asking is if you can help Gideon, please do. It would be very much appreciated by the entire team. And AJ, for those of you who've already donated, thank you so much. That was over the weekend and we're well on our way to achieving our goal. So thank you guys for those of you that have helped us to help Gideon, because that's what it's all about on this planet, helping each other. That's the key to it. The other thing is we've launched a new website that I'd just like your comments on. It doesn't fully function at the moment. It's not meant to. So don't start sending me emails saying that button to buy doesn't work and that doesn't work, because it is at its early stages. But what we would like is your feedback. If you spot any spelling errors, then let me know or let my wife Laura know. But feedback is what we're after. And again, if we implement any of the feedback that you've given us, what we will do is we will send you a voucher for $250, okay, off any of our products, including, the mentorship courses that we do as well. Let me just find the link to the website. Yeah, it's here. I'll put it in the room. And again, I'll put my wife's email address in here. That's the link to the site. And let me just post it in here and just make sure it works. Yeah, it does. There you go. It's the second one. Ignore the first one. It's the second one. And I've posted it in the room there. And what you'll notice here about the new site is we are launching a new newsletter, which you can subscribe to. Okay. No, Richard's just told me. Actually, anybody that, that's even better. Anybody that contributes any feedback to the site will actually get a copy of all of Tom's newsletters, volume 1 to 3, each valued at $99. So forget the $250 voucher, that's out the window. You're actually going to get copies of Tom's newsletters in colour as a PDF document. So thank you for that. Yeah, trade2win.com. Yeah, if you're going to give us feedback, but it's not really, it's just a landing page more than a website. Okay. Right, well, I'm just going to put the link back up here for Gideon's thing here. It's that one there. And if you can't donate through there, I believe if you email AJ, he can send you the bank details directly, because a couple of people said they wanted to do a bank transfer, which is absolutely fine. Let me post that in there. And AJ's email, which most of you have probably already got anyway. In fact, just email Laura. Email Laura at tradeguider.com, because we don't like to, we try to keep our tech support through the ticketing system. So just email Laura at tradeguider.com and she'll be able to assist you with that. Okay, good. All right, excellent. Let's just see if there's any more questions. Yeah, SJ, actually, if you look at the new website, you're going to see we've changed the way that we offer the software and the training. If you go to the products and services page, forget the books for a second. You can get Danny's book there, by the way, that I mentioned earlier, but it's not these. Remember, these order buttons aren't active yet because it's a new site. But you're going to see that this is now the new. These order, but don't try and order here. If you're interested in any of these packages, you need to email Laura at tradeguider.com, my wife, and she will contact you. Again, I'll put her email in. It's just laura@tradeguider.com, and she will email you a special order link for these packages. Basically, you'll see what it includes in each package. You can see it. It's really clear. And if you click on the little buttons, the little question marks, okay, it tells you, like, for instance, if you want trade alerts, there's details there of our trade alert service. We have a traders lounge, which is on Skype. We have the full educational library. If you just click on it, it takes you through to that page. Okay, so it's, again, this is a brand new thing. Have a look at it. If you find anything that we can improve, let me know. How was the volume less than the previous 2 bars derived? Ken, it's simply done with the average volume histogram. So basically, if we look at the no demand bar on the Japanese yen, where we were still short here, you can see that the volume on the no demand bar is less than the previous 2 bars. It's an up bar with volume less than the previous 2, and that's what we call no demand. You can see how they marked it up straight up. We're back into this area, look. Could be another trade here, as it happens. Thanks a lot, James. Appreciate that. The ES, I think, is going to have a pop-up first, and then it's going to correct. Yes, Bob, I will post this on YouTube. And again, just to be clear, the link for that will be available on this website and this website only. I'm going to put it in big capitals, and that's where all of the information on my trading plan and everything that I talked about today regarding that upthrust trade, which, just to remind you, was on the Japanese yen here. Yeah, there it is. That was the short trade. And there could be another one coming here because you've got a secondary upthrust that's just appeared. So this could even happen again. Mentorship. SJ, I would order, if that's available there right now, that's a great place for you to start. Yeah, definitely. But because that will potentially be taken off when the new site is launched. Yes, to answer your question. Good, and thanks for those of you that are going to donate to Gideon. I appreciate that very much. Okay, so we've been going for 2 hours, which is what I said. Sorry, Grigory, I didn't manage to bring you in, but I wanted to keep this. It's just been so busy. There's so much going on. But I'll give you a call later, Grigory, so we can arrange tomorrow. Okay, Daniel. Okay, good. You made a nice long trade on the pound, and yeah, there it is. We did say that the pound was looking like it was going to push higher, and there it is. There's the test. Yep, nice trade. Well done. Good. Great. All right, everybody. Thank you so much again for your time. And on behalf of everyone at Trade Guider, we wish you obviously constant profits in your trading. Please go and look at the course. We're pretty certain we know it'll help you. And any feedback for the website, gratefully received. On behalf of the entire team, it's been great being with you over the weekend and today. We've seen some great principles, got a nice trade in there, and been able to show you how you can use this for stocks as well. If you've got questions, email my wife Laura@tradeguider.com, and she will direct your inquiry to the right person, whether it's me or whether it's Danny or whoever. So if you've got questions, if you want to take it to the next level, we're here for you and we want to help you. Thanks a lot, everyone. Have a great rest of your trading week, and I'll see you next week when I'll be doing some live trading as well. Take care. Bye-bye.